Hello, traders. This is Chris Keane from KeenePointOfView.com. Most of us were sidelined last night and most of today waiting for the FOMC minutes and how they were going to shake the world. We were expecting an announcement of further quantitative easing, or maybe the extension of Operation Twist, or even the extension of low interest rates until the year 2015. What the Fed did is they extended Operation Twist until the end of the year. They kept quantitative easing on hold, but suggested in the wording that if the situation doesn't pick up, it would be something that they would consider. And there was no mention of interest rates. So you would expect that maybe the majors would lose ground after the news, because they have risen quite sharply. And if we look at the Aussie USD, they've skyrocketed basically in the last 4 or 5 days in anticipation of the additional quantitative easing. That did not occur. The majors didn't lose ground because basically we're in the same situation as we were heading into last night. The Operation Twist is still in effect. And quantitative easing is a possibility in the future. And until non-farm payroll comes out and either eliminates the question that quantitative easing could be required, then we're always going to have this cross the bear above our heads. So let's look at the trading, which is quite simple heading into the end of the week. The first actually 3 pairs that we're going to look at, the Euro USD, Great Britain Pound USD, and Aussie USD, are simply riding these trend lines higher. And as long as the pairs remain above these trend lines, there's no reason to have any other bias than that if the pairs are going to continue to rise. So any move down to the trend line should be considered a buying opportunity, and for a bounce higher. And if the Euro USD can break above this high this high resistance level at 127.50, which is the resistance for this week and last week, the high for this week and last week, and the 50 fib, which comes in around at 127.84, this resistance zone, we could easily get a pop all the way up to the 129 level heading into the end of the week or early next week. If we get a break below this trend line, we could see a move down quickly, actually, to the 124.40 area, which would head us back into the congestion zone into the near future. What's kind of interesting, if you look on a larger scale picture, if we do happen to get a pop higher into the next week towards the end of the month, towards the 129 area, we will actually be hitting quite significant resistance then, because we will be all the way back up to near the yearly trend line that has contained the pair's descent over the last year or so. So the next pair we're going to look at is the Great Britain Pound USD. As you can see, the Pound USD has also been riding up a similar trend line, but not with the same conviction as the others. So I would trade this one a bit differently. If the Pound can pop above the 50 fib from the May lows at 157.82, we probably would pop higher to the 0.618 fib level towards 159. But if we break below this weekly price level around 161.15, and we'll probably just go back down and chest the trend line. But if we break through the trend line, I would wait for at least a 4-hour confirmation, because this pair hasn't been respecting this trend line and is known to overshoot and retrace quickly. So the trick to this would be look for a momentum and a pop if we break down a pop below, but also some staying power before you would enter into any trades. And my bias would be for the move higher above the 50 fib, as long as we remain above the probably about the 156 area. The next pair we're going to look at is the Aussie, which is actually very similar to the New Zealand cross, and it's moving up aggressively with its trend line. It moved down a little bit today, but it was contained right by the 6.18 fib, which comes in around 101.30. It bounced off that and then moved all the way up to test resistance at 102.20. So it's basically went up and touched both its support and resistance level. Similar to the other pairs, as long as it stays above the trend line, which comes in around 101, the bias has to be for a move higher, and we can move back up all the way up to the 103.50, and then ultimately 104.60 area, and then we're right back into the consolidation zone that contained the pair in the beginning of the month. Same exact case with New Zealand. Now we're almost there in New Zealand. We get a pop above 80 after they just beat GDP numbers. We could move up to 80.60, and we get in there. We're in the consolidation zone, and there'll be questions about moving up towards new year-to-date highs. But it looks like this move has legs, and as long as we stay above that trend line, but you would have to, there has to be a pullback at some point, and nothing happens in a straight line. So keep your eye out for any sort of unexpected occurrences or anything out of Greece or Europe in general. And as you can see that the Canadian cross broke below 102. And now, as long as the pair remains below the 102 level, we could well be in for a move all the way down to the 1050 level. If we break back above the 102 cross, we could go up to test 102.30, which isn't that great of a move, and ultimately up to the 103.25, 103.60 zone. That's where the first real level of resistance would come in. And these trades are, the only thing that's keeping these pairs going up is the expectations for further quantitative easing. All the technicals reports out of Europe have been poor, and the reports basically out of the United States have been poor also. So, and in Europe, you also have the problem with Greece expectation, and Spain, Italy, with bond yields increasing almost on a daily basis. So there will be a point in time when news flow is going to go away from the United States, and we're going to start seeing a push down. I'm not sure when that's going to occur. I mean, it could happen tonight. Something unexpected could happen, or it could be until non-farm payroll reports comes out, and then they'll have a true indication, a major number to work with that will really put a case for or against quantitative easing. So as a quick summary, basically ride the trend lines in most all the majors of the pound, the Great Britain, the Aussie, New Zealand. You're going to look for a break of the 80 level to go to 80.60, and on the CAD, you're going to see as long as below 102, actually it's 102.30, the bias is for a continued move lower. This is Chris Keane. This is Currency Watch. Everybody have a good night and keep your trades keen.